Crude oil and natural gas both have resumed the week on a bullish note. You can see crude coming to the next resistance levels at 81.5, while natural gas is also stayed above 2.7. Now, what to expect throughout the day? Which position you should take trading crude and nat gas? Is it going to continue with the bullish bias here, or we can see a possible reversal? Which position you should take in order to profit? We will see with the help of charts and indicators. The next update on oil and natural gas positions and trading levels will be released before the US session. Few hours from now, almost 8 to 10 hours. Do watch the second update as well, and hence press the bell icon, which will see every update definitely keeps you gives you a clear picture of what to expect in the forthcoming few candles. So with that, press the bell icon. Yes, your every like, share, subscribe and comment is a great motivation, inspiration for me to deliver on time, every time, twice a day, with consistency and to the best of my abilities. And hence, like, share, subscribe and comment, friends. This is a great motivation. With that, let's start. First we'll look into oil, followed with nat gas. Do watch till the end. Now look at oil on the hourly charts. You can see first of all, if the near term, first look at the near term candles here. See, this was the bullish flag. This is the breakout. It is still trying to continue in this bullishness. But right now, I will wait for the next candle, which is for in it to confirm. If it achieves higher highs, then only we should treat this as bullish, as there could be a possible reversal. Now, where you should take a sell entry. See, now once it breaks below the zone, that is 80.5, is where we can take a sell entry. You can see consolidation and you can see support levels here. This was also resistance. Now it is going to be the support. But look at the moving averages. This has crossed over, trading with divergence. This is a good sign, bullish sign for crude oil here. Hence, below 80.5, we can expect a sell entry, and above 81.6, we can expect it to buy. But let's have a further detailed look. Stochastic is overbought here. MACD is bullish. RSI is very near to the overbought zone. Coming to on the 2-hour chart, see likewise trying to trade in this bullish channel. Above 82.5, you can expect we might see 81.5, we might see 82.3, 82.6 is the next strongest resistance for oil here, because once it stays above 82.3, 82.6 zone is where bulls might try to pitch in. That is the only level which will confirm the complete or a little reversal in oil here, because beyond that it is going to stay consistently bullish. Hence, you have to be watchful of those levels. See, moving averages have started to converge here. It is not yet crossed over. Stochastic is overbought. MACD is divergent. MACD is bullish, looking upwards. RSI is flat, near to top. Coming to 3-hour chart. On the 3-hour chart, see Bollinger Bands. It is at the top of the Bollinger Bands. Remember, one bullish candle, couple of consolidations, one bullish candle. Possibly, it may try to trade in this channel itself. It may try to stay in this fashion itself, where we can see higher lows, lower highs. Now, if you just connect these lows and connect these highs on the 3-hour charts, the bottom of this channel somewhere here at around 80 and 79.5 or 79.4 levels. So yes, even if we are selling at around 80.5, we have to be cautious of the first target at 80 and the next at 79.5. Only and only if oil stays below 79.5, we can expect it to stay bearish. Stochastic is overbought. MACD is divergent, bullish, looking upwards. Remember what it is trying to do. It is trying to complete first wave, and if it converges from here, it can give the red part of this wave. So we have to be watchful. RSI is rising, and on the 4-hour, now look at the 4-hour chart. See, after a couple of retracement candles, one bullish candle, top of the Bollinger Bands, it may try to stretch the limit of the Bollinger Bands. Hence, buying at around 82.6, we can expect 83, 83.5, 83.6 levels at the very, very strong resistance. Oh, sorry, 82.5, 80, 81.6 if you are buying. 82 level is the first target, then 82.3, 82.6 is a great resistance, and beyond that only little more bullishness is confirmed. Remember what we can see it as, after staying bearish, it is now trying to give a breakout. So we have to be careful here with the sells. Stochastic rising, it is back to overbought levels. MACD has crossed over, trading with divergence, but it appears it is just giving the greener part of this complete wave. Possibly later it may converge, crossover for sell again. RSI rising. Coming to the daily chart. Now on the daily chart, see higher lows are seen, third bullish candle. See, new candle on for oil on this chart is yet to begin. So possibly when the next candle starts here, we may see it trading in red. That is also possible. I will wait here for a while when the new candle starts, because see, this is what it may try to do, achieve 82 levels, and then from there a possible reversal. It is trying to stay in this zone. Support is seen at around 80 and 79.5 levels for the day. Stochastic rising, MACD is, see, only thing is MACD is extremely bearish here. It is trading with a fat belly that suggests a possible conversion. RSI is rising. Considering this, I will recommend you to buy today at 81.6, but then 82 first target, and then 82.3 and 82.6 levels. These two are very, very important levels. Only and only if you see it is staying above 82.6, we can say that the bulls are trying to pull back on the upside. Else, there is a possibility of a reversal. It can continue with the drop, achieving the highs at around 82 or 82.3 levels. We can see it possibly resuming its downward journey, and hence you should be cautious alert till towards 82.6. On the downside, take a sell entry at 81.5, but then 81, 80 and 79.6 levels. These are the three levels you should be cautiously watching. Take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Let's have a look at natural gas. Before we proceed to gas, I have a couple of offerings. First is my mentorship batch. The 25th batch is going to start on first week of September. Only limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now look at the hourly charts of gas. You can find out lower highs, lower lows. So the levels you should watch out for on the upside, we have discussed several times, 2.76. Only and only if you see net gas staying above 2.76, you can say a breakout out of the channel, and then it is going to resume its upward journey. We can again expect it to hit 2.8 and $3 levels. Now look at the near term formation here for net gas. You can find out, see, bullishness getting diminished here. We can see slight retracement, and now if you see it again staying about, now 2.72 is the first, or rather 2.73 is the first resistance. Beyond that, you can expect the nearest resistance which it will get is at around 2.7576, and any move about 2.76 will call for the bulls, and we can see 2.8, and then beyond that sky is the limit. Stochastic is overbought. It is trying to cool down a bit. MACD is trading with a fat belly. It can converge a bit, which suggests possible red candles. RSI is flat. Coming to 2 hour chart, likewise on the 2 hour chart, see, the bearish candles were sharper. Bullish candles have seen a retracement. Lower highs are seen. Now this is why I say bullishness is there. However, this is just a retracement. Once it stays only about 2.76 is where the reversal, complete reversal will be confirmed. Right now it is shying away from giving you higher highs. So yes, you can buy about 2.72 itself, but then 7576 is the level only above which we should treat this as bullish. Till the time it is just a retracement here, we have to be careful around 2.7576. Stochastic is overbought. MACD is divergent. MACD is bullish looking upwards. RSI is flat. Coming to 3 hour charts, on the 3 hour charts you can see a double bottom, but it was outside bullish bands. We can see a retracement till towards the 20 period moving average. Right now prices fail to stay bullish here. It is right now getting a downward pressure. I will look forward to, if it stays above 2.72 at least, then 2.7576 is the zone which it needs to break past. By similar observation, nothing different. Stochastic rising, it is back to overbought levels. MACD is divergent, bullish. See, this crossover is happening at a lower levels, first bottom. If it stays above zero line, consider that as a reversal. RSI is also retraced a bit. Coming to 4 hour, now on the 4 hour chart, similar observation, price is divergent from the 20 period, again converging and again converging. Hence, this makes this zone completely important. Yes, it can rise a bit, even if it tries to rise above 2.8. Remember, even if it tries to rise above 2.8, you can expect it to get the next resistance at around 2.8485 levels, which is going to be the next stronger resistance, and hence you should be careful of that. The stochastic rising here again. MACD has crossed over at bottom, trying to trade with little divergence. You can see whenever it crossed last time at around these levels, it stayed consistently on the buy side. So it can give you another bullish cycle here. R is almost flat. Coming to the daily. Now look, several times I have said on the daily chart, see, this is the rise, bullish flag, breakout. Now after the breakout, this is retracement, and it could yield again higher highs. Yes, it is staying in this bullish channel on the daily charts. Hence, any break below 2.6 is the only case where bearishness will be seen. So also remember one more point, the new candle when it starts on natural gas, If it starts above 2.72, you can expect 2.7576 as a great resistance. If and only if net gas stays above 2.7576, we can recommend, or we can expect it to show or display further bullishness, and then I will look forward to this zone here at 2.85 levels, which is going to be the strongest resistance. Beyond that, again, flag formation and a breakout should be treated. Stochastic is oversold. MACD has crossed over, trading with a little divergence here. 3 red candles are done. It may try to converge. RSI is flat. Considering this, first thing is where to buy. I will recommend you to buy natural gas about 2.72. Expect 2.7576 as the first resistance, 2.8 as the next, and then 2.8485 as the third resistance. Only if it stays above 2.8485, we can confirm that bulls are back, and we are looking at $3 levels again in the coming sessions. If not today, possibly in the coming sessions. Definitely it will try to break past 3 and 3.2 levels. And on the downside, I will recommend you to sell here at 2.66 levels, below which you can still expect 2. See, rather I will say 2.64 is a good resistance, 2.62 is a good resistance, and 2.6. Only if it stays below 2.6, we can expect that natural gas is going to stay bearish from here. So even if it breaks past 2.6, 2.55, 2.48 are two ultimate strong support levels, because below 2.48 is where the bears will try to take over. Else, I do not see it going in fact till towards 2.48, but these are markets, do not work as per me. However, chances for the bullishness is there. Take your positions accordingly. Trade with the stop loss, trade with the trailing stop loss. Do like, share, subscribe, and comment. Do press the bell icon. Join my mentorship batch, join my signal channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.